Hey everyone, in this video, I'm going to conduct a basic financial statement analysis of one of the stocks that's in my recommendation for top 24 stocks to buy in 2024. And that stock is PayPal. So in this video, I'll take a very introductory look into PayPal's latest quarterly 10Q statement. So follow along, and if you have any questions, comment down below and I'll be happy to answer them for you. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so the first thing we're going to look at is the company's description of its business, right? So PayPal saying that they enable digital payments and simplify commerce experiences on behalf of merchants and consumers worldwide. That's really the core of the business. That's what has me excited about PayPal stock is the convenience it adds for both consumers and merchants. It makes it easier to make purchases online. Think about the difference between using your PayPal account, which you can have it already logged in, or using your credit card information, which every time you visit a new website, you have to go and get your credit card, type in all of those numbers, the security code, and on and on. What if you're sitting at your computer and your wallet's in the other room? You got to go all the way and get your wallet and on, right? So it's just more convenient to have your PayPal account and use your PayPal account when you're shopping online. And if I've learned anything about the consumer in my decade of investing, that is that consumers love convenience and they're willing to pay for convenience. So that's the core of the reason of my bullish case for PayPal stock. That, and of course, it's cheap valuation. It's trading at a forward price to earnings ratio of less than 10. So let's move on. They do more than just their PayPal account, right? They enable their merchants and consumers to manage and move their money anywhere in the world, anytime, on any platform, and using any device when sending payments or getting paid, including person-to-person payments. So that's the core of the business. That's what they do. That's the way they plan on serving customers. All right, so the key for PayPal's business is in growing its transaction revenues. The more transactions that occur on PayPal's platform, the better for PayPal's business in a number of different ways. So let's take a look at what management said about its transaction revenue in its latest quarter and the latest 9 months. They say that transaction revenue grew by 420 million or 7%, or 6% in the 9 months. So 7% in the latest quarter, 6% in the latest 9 months. The growth in total payment value, transaction payment value, and the number of payment transactions from their Braintree products and services, partially offset by a decline in revenues from our core PayPal products and services. So this is a big key here, and in my opinion, it's one of the main reasons why PayPal stock has been down and has stayed down throughout 2023 and now 2024. And that is that within the business, more of the revenue, more of the activity is happening on their Braintree products and less is happening from their core PayPal products and services. And that's bad news for PayPal stock investors like myself. I do own PayPal stock because the PayPal segment for PayPal is more profitable than the Braintree segment. And so as more of its revenue shifts over to the Braintree side, that's less of a profitability for the business, which we're going to see a little bit more of in this video. Additionally, PayPal is losing active accounts. So they have now 428 million active accounts and 432 million as of September 30th compared to September 22. So their active accounts dropped from 432 million down to 428 million from last year September 30th to this year September 30th, a decline of 1%. Now, while that might be small, they're quarterly, they're decreasing their active accounts for 3 straight quarters now. It's been falling continuously. And so that's a big risk for investors who are not sure how much longer this decline will go. Maybe it's starting off at a 1% decline and that decline accelerates, because remember, the whole value of PayPal is the network. So the more merchants that accept PayPal, the more people will want to have PayPal. The more people that use PayPal, the more businesses will want to accept PayPal. But if less people are using PayPal, then less merchants will want to accept PayPal, which will then make it less attractive for people to use their PayPal account, which will then cause a decrease in merchants accepting PayPal. And you get the point, and it can really decline quickly and accelerate and get out of control. And that's why this is a risk that I've been discussing with PayPal stock for several years now. So TPV, total payment value, was $1.1 trillion in the 9 months of September 30th. A massive amount of transaction value occurs on PayPal's platforms, whether it be the core PayPal or the Braintree. That was compared to $1 trillion in the 9 months ended September 30th, so an increase of 12%. That's good news that more transactions are happening on the PayPal platform. But what investors would prefer is more of that happening on the core PayPal side instead of the Braintree side. Still, and that's what caused transaction revenue to grow more slowly than growth in total payment value. PayPal takes a percentage of all of these transactions as revenue, but if more is happening on Braintree, that means its revenue will grow slower than its transaction value. And management said that it was because the decline in revenue from core PayPal products. That's the key here. Thankfully, some good news in that revenue from other value-added services increased by 152 million or 25% and 33% in the 9 months ended September 30th, and that was due to increases in interest earned on certain assets in customer account balances resulting from higher interest rates. So PayPal will benefit when interest rates are higher because it can earn fees on customer account balances, and that interest income will be a benefit to PayPal's bottom line. All right, so moving on to operating expenses. PayPal highlights a slew of its operating expenses. The one that stood out to me is transaction expense here, which increased from 2.988 billion in the third quarter last year up to 3.6 billion in the third quarter in September 2023, an increase of 21%, which was far above PayPal's revenue growth rate. So such a large expense item growing at a rate faster than overall revenue is alarming. So I want to know more about it. I highlighted it, and management is going to tell us more about it below. So here management gives us an explanation. So the increase in transaction expense rate for the 3 and 9 months ended September 30th compared to the same period for the prior year was attributable to unfavorable changes in product mix, with a higher proportion of total payment value from unbranded card processing volume, which generally has higher expense rate than other products and services. In other words, this is the theme I've been talking about throughout the video, in that less transaction payment value is happening on the core PayPal product and more is happening on the unbranded side, which is higher expense and less profitable, less lucrative for PayPal, and management highlighting that here again for PayPal stock investors. So that's the key here. That's the big story happening within PayPal. And I think we saw that play out in its financial statement as more of its business shifts out of the core PayPal into the Braintree side and into the unbranded side. It could have a continued impact on PayPal's profitability. However, there are avenues for PayPal to lower operating expenses, and I think we will see more of that as the new CEO, which was only recently hired, gets involved in the business and really starts to highlight areas to reduce costs. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.